Hello and welcome to an episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, and not having a clear plan is the enemy. Using a proven tax deferral strategy such as the Deferred Sales Trust is an amazing way for you to create and preserve more wealth. Hey, I'm your host, Brett Swartz, and I'm going to be talking today on a specific topic on the Deferred Sales Trust. And it's a common question that we get asked, and this is the question: how much control do I have over the Deferred Sales Trust? And the answer is you have indirect control, but you don't have unilateral control. So let's define unilateral control. Well, that's where you are the 100% owner of something, where you can walk in, let's say, into a bank and say, hey, Mr. Banker, I have $100,000 in the account and I am the owner of that money. Would you please allow me to withdraw that account, dispose of that account, and let me take liquidity of all of the money and just cash out. That's what's called unilateral control. There's nothing in between you and the money and your decision to receive it. And so how this acts out in deals and transactions is that you need to have a third party, unrelated party to help you keep separation between you and that constructive receipt. And so one example is like a 1031 exchange. You have a qualified intermediary, and they serve as a third party to help you to not have to take constructive receipt. In regards to the Deferred Sales Trust, here at Capital Gains Tax Solutions, we act as that third-party trustee. It's kind of like a qualified intermediary, kind of like a IRA company has a custodian. These are third parties unrelated, but the difference here is the nuance is that you're not the owner of the capital or owner of the account. The money is owed all back to you slowly over time. So it is your money, it's owed to you, it's just in a deferral state, and it's waiting to be paid to you over time, because that is the nature of the Deferred Sales Trust, in that you are a lender and not the owner of the trust, because if you're the owner of the trust, it'd be taxable. And so practically speaking, though, there are clients that want to be entrepreneur and want to be able to start a new business. They want to be able to buy more real estate, and they want more ability to be able to invest and do the things they do great, which is building businesses or real estate or investing. And so one way that we help to help you to get more comfortable with what we have is by giving you the ability to form an LLC in which you can partner with the trust and then be able to invest in different assets. And I'll give you an example of that. A client, he closed a $2.6 million business sale, and one of his goals was to build some multifamily properties. And so what he did is he formed an LLC. He partnered with the LLC, and he gave up some ownership of the LLC, and then he started to build properties with that LLC, manage the LLC, hire construction crews to help build the property. In other words, he was running and controlling that LLC, and the reason he could do that with the capital of the Deferred Sales Trust is because it was a legitimate business purpose, legitimate joint venture partnership with the trust. And so these are ways that allow you to kind of run your own capital in this scenario, right? And so we got to follow the rules and the guidelines as part of what we do here at Capital Gains Tax Solutions to make sure that there's the integrity there. But as long as there's legitimate business purpose and it's for investment purposes, right? It's not like a personal primary home where you're spending the money on personal use. It's all legitimate and able to keep the tax deferral in place. And so that's really important. Some of the questions people have had to be like, well, how do I know the funds are protected, and or did the funds ever move without my signature? So the control part is more like security part. Well, can these funds just be sent somewhere without my approval, or invested somewhere without my approval? And the answer is no. You do need to approve. As a secure lender, you have the rights and protections of approval. Okay. Now the trustee as well, my role, we have to approve as well. So that is that relationship that we have to connect with and make sure we're on the same page. But part of that too, we have a third-party financial advisor that serves for that role to help keep transparency and accountability, and help with structuring and making investment decisions along with me, the trustee, and as you, the note holder. And we don't just talk about that; we actually score your risk based upon a risk tolerance questionnaire that you fill out before the money goes anywhere, and then all the investment allocations and opportunities are presented to you, and then you approve them before money is moved. As well, our funds are typically held at like a Charles Schwab or TD Ameritrade or a very large commercial bank, and you get 24/7 access to view the funds online, and And so that's how that works. And so you do have indirect control, and you do have protections with the Deferred Sales Trust. If you want to learn more about this, you can check out our new book that's coming out here soon. It's called Building a Tax-Deferred Exit Strategy, and it's a proven playbook for unlocking your ideal wealth plan for yourself or your clients. You have people like Kevin Harrington from Shark Tank in the book, and other financial advisors, commercial real estate syndicators, business and leadership minds, one of the top CPAs for Tony Robbins. And so we want to make the Deferred Sales Trust accessible and understandable, and help you to execute on your plan on your next exit. And by the way, what does the Deferred Sales Trust work for? Works for just about any highly appreciated asset, including real estate, of course, primary homes as well. It can save a failed 1031 exchange. Works for cryptocurrency. It works for stock, public or private. It also works for business exits and artwork, collectibles, NFTs. And it has a number of unique features that that kind of separate itself from a lot of the tax deferral strategies out there. You don't have to give it all away to charity. You don't have to buy a bunch of life insurance, and you can move funds outside your taxable estate. And you also have some inherent asset protections as well. And I'm going to share a few of these things here with you right now. And it includes some of the the biggest objections to the Deferred Sales Trust. And so let's go through that right now. And this is really important, because if you're going to be using a Deferred Sales Trust, you want to make sure that you have crystal clarity on what it is that it is, right? Of course, what kind of controls are in place, what kind of security is in place, and then that it's legal, and that you're working with the team that's executing these, consistently. And so just a little background: the Deferred Sales Trust has over about 20 no-change audits. It's formal audits, it's random audits. It also has billions under management, just over 3,000 transactions, a 26-year track record, and it has lifetime audit defense that's built in with the Deferred Sales Trust tax attorneys that we work with. As well, there's some significant benefits to the Deferred Sales Trust. You can actually buy back in and back out of real estate or other business ventures, all tax deferred. We call it the sell high, buy low strategy, whereas the 1031 exchange, it's the sell high, buy higher, and a shotgun wedding, which our parents taught us not to do, right? So we want to be selling high and buying low. Right now, we're seeing a shift in the marketplace with interest rates rising and cap rates still kind of lagging behind. And so it's an influx where, let's say a year ago, you could buy a cap rate at like 4.5%, and you could borrow at about a 3.5%, and you had a 1% delta. Where now we're seeing the inverse, where interest rates are 4.5%, 5.5%, but cap rates are still hovering in that 4.5 to 5 range, and you're starting to see an opposite of return, right? You're having to borrow more than what your cap rate is, and that's not great. So you want to make sure you can sell high and buy low. Same thing with primary homes, same thing with stock and cryptocurrency. In fact, we just did a cryptocurrency deal where we were able to help them exit 7.5 million of Ethereum out of 13.5 million before the crash of Ethereum and Bitcoin happened here in the last couple of months. And so they're very happy as well. They had a large amount at some of these exchanges that completely collapsed because they were loaning the funds out, and they actually lost there. But fortunately, because they did the Deferred Sales Trust, they were able to get a lot of it out and protect and diversify, and they put it into investment grade securities, protect it. They're looking to go into real estate, and so that's the ability to diversify, to defer the tax, and to get some liquidity and not be so over concentrate in a single asset class, and that's really important. And so let's talk about number 2. The income can be put back into the Deferred Sales Trust and invested into stocks, bonds, and mutual funds or other real estate assets. So the income, meaning the trust itself, remember, is paying you back, typically 8% over time, slowly. As it pays you back, you can also delay that payment, though. You don't have to take all of the payment, and those funds can be invested back into other investments. And so it's compounding not only the capital gains tax deferral, but also the income tax. It's deferring that and compounding that and building that. And that's really important. It's kind of like an IRA, right? It's part of the power of compounding interest, that the trust itself often operates at a tax neutral position, even though it's earning and building interest. Because it owes you that interest, it's able to expense that, which means it can lower your overall income tax bracket, which is a powerful way to make the Deferred Sales Trust an investment and not an expense. Which leads into one of the other benefits of the Deferred Sales Trust, buying real estate versus the 1031 exchange, which is number 3, which is a seamless partnership separation. This is where each individual owner can have their own deferred sales trust or not on an exit of a property or a business venture. And I'll give you an example. We just did a $13 million deal in San Diego. In fact, let's go to that one right now. That one was right here. It was a car wash sale. And that particular clients, 4 of them had bought land in Chula Vista, and it was like a taco stand that was doing some business, but not as much as a car wash would do. And so they approached the owner of the taco stand and said, "Hey, how about we partner together? We'll buy the land and we'll put your taco restaurant inside of our car wash for our guest, and we'll probably double your sales at least." And so they bought the land, they made the deal, and they built this property for about $4 million, but they had they were selling for about $13 million, $12 to $13 million. So they had a huge gain and that huge tax. Now there was 4 partners, and they're not in the business of doing a 1031 exchange into another $12 or $13 million deal. In fact, they want to buy land low and develop, right? So a lot of developers, before they meet us, they don't do 1031 exchanges because they need the capital to build the next project. And so they don't want to just buy land that's so overpriced. They want to buy land low and develop. And so it becomes challenging. And also sometimes the partners want to separate as well. And so in this scenario, we solve kind of 2 things: partners wanting to separate, but also some of the partners wanting to continue their phase 1 of development and wealth accumulation, where some are in phase 2, that's just more retirement, okay, a little bit older. And so this is how we designed it. We did 3 deferred sales trusts for 3 of the families, okay? Each had their own trust where the funds went into and deferred the tax. The 4th one just paid its tax, and they didn't do a 1031 exchange, and it was an amazing outcome because each of them can have a customized way to solve their challenges with their tax and with their wealth, okay? So we'll go back to this part of the presentation here. Just give me 1 second here. All right, so we're at part number 4, which is a 1031 exchange alternative or rescue. Really, really important, right? That you have a backup plan in case your 1031 doesn't work out. Why isn't it working out? Lending is changing, sellers are changing, market's changing. And so you want to have an alternative or backup plan in case your 1031 fails. And so we can rescue a failed 1031 exchange without having to identify the deferred sales trust because it's not a property. By the way, not to be confused with the Delaware statutory trust, which is another form of a 1031 exchange. However, this is very important. Work with Capital Gains Tax Solutions, our company, going on to capitalgainstaxsolutions.com to make sure you have a qualified intermediary that will accommodate your 1031 exchange, your Delaware 1031, or a deferred sales trust. Very important. There are those out there that don't want you to know about this, nor do they want to or will accommodate. And so once the funds are in their control, guess what? They say no to you, right? And so, which is part of a little bit of this video too, right? You give up the control when the funds go to a qualified intermediary. It's part of the game to keep the tax deferred. You give up control when you go to the deferred sales trust. That's part of it, but you always have indirect control to make sure the things are going the way they should be going. Okay, which leads into number 5. You can convert an illiquid asset like a business or commercial real estate into a diversified portfolio of liquid investments. And so that can be stocks, bonds, mutual funds. That can be some cryptocurrency. That can be hard money lending. That's like a liquid funds. In other words, you can diversify and get your powder dry. Also, part of this too is paying off debt. Like we just closed a deal here in Placerville. They had a little bit of debt, not a ton of equity, but not any liquidity, right? And so now they've just converted about a $2.5 million sale here outside of Sacramento. I represented them to sell the property and then do the deferred sales trust. And now they deferred the tax, and now they have liquidity and diversification. And now they have their powder dry and their debt's paid off. And so they're in a very safe position right now, especially with a lot of changes that are going on. And so the benefits of the deferred sales trust is the ability to convert an illiquid asset like a business or real estate into a diversified portfolio of liquid investments. Now is such a great time to be able to do that. And number 6, for those that are highly appreciated, not only assets, but also ultra high net worth, total net worth above basically 24 million married, 12 million single. Right now, you don't have just a capital gains tax problem, you have an estate tax problem. And so part of what the deferred sales trust is remarkable at is we can move funds outside your taxable estate in one transaction in one day. Takes a third party buyer, a legitimate sale, but it's an opportunity to change the characteristic of ownership to being the lender. And no matter what the deal size is, we can do that. We just did it for a $25 million client who sold a $5 million asset in Colorado to exit, move the funds outside the taxable estate. So that is huge, okay? At the close of escrow, move funds outside your taxable estate. Very powerful. You don't have to move to Puerto Rico. By the way, even if you move to Puerto Rico, it's still inside your taxable estate, right? So for the cryptocurrency, millionaires and billionaires listening to this podcast or this YouTube video, realize that that's just solving the tiger by the tail. Your estate tax is even a bigger issue. And the Deferred Sales Trust solves the estate tax challenge. It's called the Deferred Sales Trust Plus, by the way. Go to capitalgainstaxsolutions.com to learn more about that and get started today. But why are we here? Why are we here? What are we looking to do? Well, here's a few things on. I took this from John Wooden. I'm a huge basketball fan, and I played in college, and I love John Wooden and what he did at UCLA. And he had kind of like the pyramid of success. And so I'm taking a little bit off of what he did, and I'm building what's called the pyramid of transformational wealth success. So look for that in the next video. And in the meantime, if you want to get started with your Deferred Sales Trust, look at all these deals that we've closed. I want you to know that we are here to help you, and we want to be your guide. And I want you to check out our new book coming out, Building a Tax-Deferred Exit Strategy. And I want you to take control of your exit so that you can create and preserve more wealth. And if you are a wealth advisor, financial advisor, business broker, M&A attorney, cryptocurrency expert, real estate agent, luxury agent, commercial real estate broker, I want you to go to capitalgainstaxsolutions.com. To download our free ebook, and I want you to join our free mastermind so you can get equipped with this strategy so you can create and preserve more wealth or help your clients do the same. Hey, thanks so much for watching this video. Again, look for the next video to drop soon on the pyramid of wealth success using the Deferred Sales Trust. I appreciate everyone out there. Please rate, review, subscribe, share this with someone it could help. And